Every stock tells a story, and sometimes the script changes. In the case of World Wrestling Entertainment, we saw them in the middle of a fundamental macro change in entertainment media and content, and WWE has benefited immensely from this. What are we talking about exactly here? Well, understanding historically WWE and the TV industry as a whole, you have to recognize that the industry was largely controlled by big cable companies. These guys were the middleman that were connecting the audience to the content provider. In other words, they were guards at the gate, and to have any chance of showing up on their lucrative TV slot times, guess what? You had to pay a substantial amount of money. For example, up until recent, the traditional model had WWE pay half of its revenue to cable companies. And for most of WWE's history as a publicly traded company, that was an unfortunate but acceptable reality. Their stock price and business model were predictable, but ultimately lackluster and flatlined. It went public in 1999, and from that point until 2016, the stock price was down 25%. Talk about patience not paying off for shareholders. But then things changed. WWE, taking a play from Netflix's playbook, decided to provide their content directly to the audience. They believed they had enough of a committed audience that interest would be sparked. The transformation led to them having 1.8 million subscribers. By bypassing cable companies and directly connecting with the consumer, we saw a company whose revenue jumped to all-time highs, who since January 2017 had their stock grow 300% and for a certain period was ranked the 12th best performing US stock. Here's the company's respective revenue year over year. As you can see, in 2017 they made $801 million, and it is expected that that number will increase when the 2018 final figures come out, because in the third quarter in 2018 revenues increased 9%, increased sale of advertising and sponsorships, and the continued growth of a WWE network that yielded a 9% increase in average paid subscribers to more than 1.6 million. The company has three revenue segments: media, live events, and consumer products. And it's media that has all the attention. The other two have for the most part stabilized, while media has reinvigorated the company. From 2016 to 2017 on an annual basis, media grew 10%, while live events and consumer goods grew 5%. If we compare 2016 to 2018, the figures show more drastically the kind of growth the company is experiencing. In particular, in Q2 2018, we saw media revenue from $121.9 million to $202.6 million. That is a 66% jump. And in fact, when we look at media in their business model, even without the fourth quarter in 2018, this year combined, the media revenue is still larger than 2016's media revenue. Without a whole quarter of sales, WWE has made $478.1 million, whereas 2016 as a whole, they made $476.9 million. This kind of speaks out to the success the company has been experiencing. And they're not stopping just yet. WWE expects Q4 to have paid subscribers grow to 1.56 million, which will contribute to growth of about 8% for the full year. As you can see, the company has gone through a number of initiatives to clear the clutter and have a more direct relationship with the consumer. We see this either in the average paid subscribers figure, just here, or their social media reach with Twitter, Facebook, and other platforms. Whether it be through subscribers or social media presence, this growth is expected to continue with the loyal fan base that it holds. But the reality is, the growth on this stock has been due to a fundamental change in the business model rather than the business itself. Meaning WWE is still WWE, the wacky fake wrestling that has a devoted fan base. But typically WWE has a hate or love relationship, meaning people either love it and follow it religiously, or they don't care for it at all. So yes, it is true, it has changed how it receives its sales and how it pays for costs, and it has done so in an attractive manner. But it may also be said that the growth and change is priced into the stock, as it has gone up 300%. The big catalyst for the company is its media. WWE doesn't necessarily have the platform to grow exponentially the way Disney or Netflix does, because they don't have a variety of content. There's something for everyone on the other aforementioned businesses. So unless large portions of the world suddenly start loving WWE, it will always be a very niche and specific business model with somewhat of a glass roof over its head. However, paid subscribers are growing, and it is something that should be applauded. If you have interest in this stock, the media and the subscriber figures are the things you should be looking at most closely. As always, we want to thank you guys for listening, and we want to take a moment to wish you a happy holidays and Merry Christmas from us, the Elevate Group.